We're going to be hearing from United Health. Also, more big U.S. banks coming out this morning. Let's bring in John Manley, Wells Fargo Funds Chief Equity Strategist. Good morning, John.
Good morning.
Let's start with the collapse of the health care bill in the Senate. This happened late yesterday. We're going to be hearing from United Health in particular. They're out of the exchanges, but this will reverberate, I would assume, with the different companies.
Well, I'm an equity strategist, not a political analyst, thank God. And I look at it from what it means for the healthcare industry. And it seems to me that this is an intractable problem. We have an aging population, we have new technology coming at us, and we have a representative democracy. Those three things collide. I think it means that we're just going to have to spend more of GDP on healthcare. I'm getting older. Everyone around me is getting older. It costs more to do it when you're older, and there are things to do.
All right, so we've got health care. We're all getting older. We can't change that, and we can't change the fact we got to pay taxes. What does this mean for the Trump agenda? All of this is what investors are banking on in general. Health care reform, tax care reform, get the budget fight coming out. I mean, this seems to be a problem.
Well, it would seem to be a problem if the market hasn't treated it as such. I think what's happening is I don't think there's very high confidence in Washington amongst investors. How else do you explain you had such a volatile political situation and such an incredibly non-volatile market? There's an old saying, expect the worst, you'll never be disappointed. And I don't think the market's been disappointed so far this year.
All right, let's talk about banks. Maybe a disappointment when it comes to trading volume with some of these names. We shall see. In particular, let's start with Goldman Sachs. An investment banking business that may be kind of showing signs of weakness. When we get that report, how do you feel about Goldman Sachs? And also talk about Bank of America.
Well, I can't talk about the individual stocks, but I'll talk about the themes that run through them. And with Goldman Sachs, trading revenue is always something we put a fairly low multiple on because it goes up and down. And we're seeing perhaps more down than up at this particular point in time. The story on the banks, the story on the financial institutions is that ultimately the Federal Reserve will normalize the yield curve. That means higher short-term rates than we have now. That means better potential profitability for banks. And I think in this quarter, as they're reported, on balance, you'll see signs, glimmers that that's beginning to happen. Take that, add a little bit less stringent regulation, and I think you still have a very attractive sector.
Okay, so that's good for banks, and of course we'll get those numbers later today. But let's just talk about the earnings results so far in general, because despite everything that's been happening in Washington, some of it hasn't been so good. Earnings have seemed to be positive, at least for the last 3 quarters or so. Do you think in general this quarter for earnings is going to be overall positive?
Trends point in that direction. I mean, for 2 years, earnings went nowhere, and now we're starting to see signs that they're rising. That's very important because it makes us think we're earlier in the cycle than we thought before. Or as one of my compatriots said, maybe the cycle isn't really as strong as it was before. Maybe it's just slow growth for a while. Either one of those scenarios, I think, gives you better markets.
Well, John, thank you for your perspective. We certainly appreciate it. The banks, of course, something to watch, John. And Leah, Netflix, which I watch a lot of. I've been very open. And that's a stock to watch today. It's going to be fabulous.
Yeah, it certainly is.